Today I want to talk to you about another life event that has a really big impact on many people's lives, and that's receiving an inheritance. Receiving an inheritance is always an interesting time in someone's life because you've got typically a really sad emotion of someone passing away. It's a very highly emotional time that isn't very fun, and many times you're not thinking very clearly. However, while you're sad about this loved one passing away, you're simultaneously inheriting a large sum of money many times and having to make decisions about how best to take care of that, the different opportunities that are there, and how to maximize it for your plan. And so I want to talk about a couple key things to think about when you're going through this difficult time and the importance of maybe working with a financial planner and how they might be able to help you through that. So first, I want to talk about two really simple things to make sure that you know about when you're going through early on in an inheritance process. The first is, what type of assets are you inheriting? And this can mean a couple different things. So number one, it can mean what type from a taxation standpoint are you inheriting? Are you inheriting something that is all after tax? Are you inheriting something that's more of a retirement plan that might have some taxation to it? Understanding the difference between those two has a really big impact on planning. Also understanding what the titling of those assets were. Were they held inside a trust, or were they held direct in the person's name who's now passed away? Understanding that will also help you understand the process that this has to go through, the likely timing, and even what the options are for you once you receive these assets. Those are really important concepts. And the third one that you want to really pay attention to is who is managing the estate or the trust. And so if it's an estate that's going through probate, typically the words that you'll hear will be an executor or administrator of the will. That's the person who's in charge of bringing the estate through the probate process and making sure that it gets distributed correctly to the beneficiaries. If things are held in trust, though, what you'll typically hear is you'll hear the word trustee. And this is the person who's in charge of the trust and making sure that the trust is executed appropriately after that person's passed away. Maybe that's you. Maybe you're the executor or the trustee. But if you're not, then making sure you understand who it is and making sure that you have an open line and a transparent line of communication to that person is a really important concept. I talked a second ago about tax implications, and I want to dive into that a little bit more because tax implications are something we get asked about all the time when people receive an inheritance. Most of the time when people first ask this, they think about the estate tax. And the estate tax is something that the federal government, as well as some state governments, will charge if the overall person's net worth in a state is above a certain level. This doesn't normally come into play, though, especially in most states that don't have an estate tax, because the federal estate tax limit is actually about $14 million per person in 2025. So if it's a married couple, they might have an estate exemption of up to $28 million. That just significantly narrows the people who have to worry about that. So for most of the clients that we're dealing with, the estate tax exemption, at least as of 2025, is not something that we have to worry about. There's a lot of political talk all the time about what they're going to do with this number, so there's a chance that at some point it might be lower and it might impact you, but for now that number is really, really high and minimizes the impact. However, the taxable impact that does matter is the income tax impact. So I talked about the estate tax, which doesn't really matter, but there could still be some income tax consequences to you. And it goes back to the type of asset that you're inheriting. And so most assets actually will be able to pass to you tax-free. And that's because of a principle called step-up and basis. And this is a really unique, almost too good to be true sounding principle. But when you inherit an asset as part of someone's death, any gains that they had on that asset are completely wiped away, and you get to inherit it completely unencumbered, completely with no tax due, basically starting fresh. This is an incredible concept that allows you to take something that maybe someone had before, potentially would have owed a ton of gains on if they would have sold the day before they passed away, but if they pass it to you as death, you owe no taxes on it whatsoever. But the other type of asset that you might inherit, and a really common one people inherit, are retirement accounts. So things like IRA accounts or 401k accounts. And these do typically have some pretty significant tax implications. If they're pre-tax retirement accounts, you're going to pay taxes when you take the money out of those accounts. Also, the IRS has some restrictions on when and how you have to take that money out, typically requiring you to take out a little bit each year and have it emptied within a 10-year time span. That's pretty significant and has some advanced tax planning implications that definitely means you want to talk to your CPA or your financial planner to make sure you understand how to do that and how to make sure you stay on the right side of those rules. But if you've received a large inheritance, there's also a couple other steps that you probably need to take. You don't have to do this necessarily right away, but to make sure that you update your own estate plan is also going to be important. Your financial situation probably just changed pretty drastically with this inheritance, and making sure that your personal estate plan now takes that into account and still carries out your wishes appropriately is something that many people forget for years and years and years, but is really something important that probably should be updated sooner rather than later. The other thing I want to briefly touch on is family dynamics. Whenever we see an inheritance, especially if it's got larger amounts of money attached to it, it's really sad that sometimes we see families start to fight and get angry at each other over some things that actually in the grand scheme of things are pretty small. So if you're going through this process, try to remember that, hey, this is a really emotional time frame for you, as well as maybe for siblings or other family members, and try to be patient, because many times these things take a little bit longer than they seem like they should, but really everyone's just trying to do the best that they can. And so making sure that you keep the family dynamics and understanding that this is a difficult time in the back of your mind many times actually helps this process go a little bit smoother. And the last thing I want to hit on is something that we get asked quite often, and this is actually before you've received an inheritance. Many times people ask us questions about, hey, how should I plan? I think I'm going to get this inheritance. My parents, are a little bit more elderly. At some point they'll pass away and I'm going to receive this inheritance. How do we plan for this? And the answer is that we have to do this actually really carefully. If we're not careful about doing this, we could actually end up planning on something that doesn't actually come to fruition. And estates and inheritances are really hard to plan on because of the fact that we don't know the timing when you're going to receive it. We also don't know the amount exactly and when you're going to receive it. Those two variables add a lot of complexity, and so many times we actually exclude or just give a really conservative estimate of when and how much you're going to receive from an inheritance. So as you can see, planning for your inheritance and how it impacts your financial future is really difficult. But this is an area where working with a certified financial planner or some other CPA or financial advisor can really help. And they can make sure that you conservatively plan appropriately, but still make sure that you utilize this blessing that you've received to really make a positive impact on your life. If you have more questions, again, please reach out to us or download the guide that we have on our website that walks you through the different steps and the key things, many of which I just talked about, the many things that you need to look at and pay attention to make sure that you handle an inheritance well.